can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sand. Right now, I feel like 100 grand.
You are listening to Inspired Insider with your host, Dr. Jeremy Wise.
Dr. Jeremy Wise here, founder of InspiredInsider.com, where I talk with inspirational entrepreneurs and leaders like founders you've heard of, some you've never heard of. This is part of the Top Israel Leader series, and some others you should check out. Maurice Navon of Mobileye, he talks about the Mobileye journey being acquired by Intel for $13.2 billion. That still baffles me, Liron. And fast-growing companies like Kendigo, Adam Feldman talks about how they grow e-commerce companies. And Yuri Adoni, who is partner at Jerusalem Venture Partners, is author of Unstoppable Startup. Check it out. It will be coming out, or it's come out by the time you listen to this. And he wanted to share the secrets to Israel's incredible track record, which today's guest will be sharing from the ground. Also, this episode is brought to you by Rise 25. I co-founded Rise 25 with my business partner, John Corcoran, and we help B2B businesses connect to their Dream 100 partnerships and clients and help you with run and launch your podcast. To me, Liron, relationships is the number one thing in my life. I'm always looking on how do I give to my relationships. And the podcast allows me to profile other thought leaders and companies and give to them and and spread their message. So if you've thought about launching or running a podcast, email us at Rise25. You could listen to my business partner and I banter like an old married couple on a video on rise25.com. Actually, Liron, the motivation behind the podcast was more personal. Actually, my grandfather was a Holocaust survivor, and his legacy lives on because of the interview the Holocaust Foundation did. So people can also check that out on InspiredInsider.com on the About page. So today's guest, I'm super excited, and big, thank you, Shalom Levy, for introducing me to today's guest. Liron Rose is a serial tech entrepreneur. He established After Download, which is an Israeli startup sold to the tech unicorn ironSource. And if you've not heard of After Download, it went from $0 to $30 million in 3 years. They hired over 50 employees and was acquired by ironSource for over $28 million. And he was managing director of TechStars Israel. He runs Rose Innovation and was one of the first investors in SimilarWeb, which is a known Israeli unicorn. He's also invested in Kenshu, Fiverr. Liron, I have several people, buy box experts who are friends, and they have a great company. They love Kenshu. They partner on different Kenshu things. They love it as far as in the e-commerce ecosystem. So, Liron, thanks for joining me.
Thanks for having me.
So I think I want to encourage anyone should be contacting you if they want to get into the Israeli ecosystem, the investing in the Israeli ecosystem. I feel like from doing this Top Israel business series, people are missing out if they're not in that ecosystem.
Yeah, I totally agree. I mean, I've seen this study couple of days ago. Tel Aviv, or basically Tel Aviv, represents the entire country. We're a tiny country. We're like number 5 ecosystem in the world. So if Silicon Valley or the Bay Area is number 1, and then I think like New York is number 2, Boston number 3, then London in the UK is number 4. We're number 5. So we're one of those leading ecosystems, and I think a lot of investors in the Bay Area, in New York and Chicago, have discovered the Israeli ecosystem, invested a lot of money into local startups. Sometimes the valuations could be a bit lower than what they are in the Bay Area. So yeah, I think this is kind of like a big opportunity for investments to get a view into the local ecosystem and get some exposure to something that is out of the US.
We're going to talk about the After Download journey, but I kind of want to work backwards because when I was emailing with Sean, he basically said, what's interesting about Liron is that he did invest it all in 2019. And I thought that was interesting. And you want to start off in your investment journey, you want to talk about SimilarWeb. What did you see in SimilarWeb at the time that was like, okay, that's an obvious investment? It's risky. investing?
Absolutely. Well, I mean, in this area, like nothing is obvious, and SimilarWeb is an investment from 2009, so that's over a decade ago.
Wow.
It's a coincidence. I ran into this person. I was sitting in a cafe in Tel Aviv, and I've seen this guy sitting next to me talking to someone, and I said to myself, this is like, I don't know, there's something about this, the way this guy talks, like that kind of intrigues me. I don't know what he's up to. I'll just ask for a business card and whatever. So that's what I did, and and I never follow up, but I remember his name. And then I think it was like 6 months after that, or a year after. Some other people that I know told me, we're investing into this company, SimilarWeb. You wanna have a look? And I said, yeah, I remember this guy. I ran into him like. In a cafe, and yeah, this looks interesting. I'd like to have a look at the deck and so forth. And then, I ended up investing. I think I was like the second or third check into the company. There were like 5 people back then, and yeah, they're now like 500, 600 people. Wow. So this company grew immensely. They're like basically, I think they're like the leading rating company. And if you want to, have a look at review traffic sources and where people are going on the internet, and seeing where they're coming from, and do this on a geographical sort of breakdowns. And it's both web and mobile now. It's grown immensely. It's a great company, and I think they're like, at some point they will be probably going for an IPO or an M&A.
Looking back, Liron, what was intriguing you? Was it about this person, you think?
Well,
people say, that you invest in the jockey, right? And who's running the company. So you saw something in this person, and it was from partially your experience, partial gut. What do you think it was?
It's a mix of those things. I was less experienced 10 years ago, 11 years ago than I'm now, but still, there was like investing in these early stage, like pre-seed startups. It's a lot about, I'd say, intuition and anomaly detection. There was something about this guy, the way he looks, the way he talks was kind of, it's kind of different than how most people do this. He was that kind of an outlier in some way. I couldn't exactly say
what. Put your finger on it.
But, this is like a special guy, I'll keep this business card. Maybe, I'll dive in and try to learn more about this company. But definitely, this is not a regular guy, and that's kind of the way this thing started. It's always about the team.
Yeah, and so what was also interesting is, so you invested in that as you were building after download, from a timing perspective.
Actually, before.
Before.
I think I invested into SimilarWeb. I think I got kind of at the same time. We started after download in early 2010. So yeah, it's kind of around the same time.
And so what were you doing before after download? Were you just doing investments?
Well, I started with online marketing back in 1999. So I did a lot of online marketing as an affiliate marketer for software companies for like 9 or 10 years before that, for software companies, global software companies, distributing their B2C applications over the web. This was it was like a business who relied mostly on search engine marketing, pay-per-click, SEM, PPC, SEO, and so forth. I started to do investments in 2006. So Kenshu was my first investment.
Really? Wow. Back in 2006.
Exactly.
What was the e-commerce space in 2006?
Well, yeah. So Kenshu, basically what they were trying to do is...
Kenshu's an Israeli company?
It is. It is.
Wow.
Yes. And I
thought it was like a Japanese company from the name or something.
Yeah, it's a Japanese, I think it's a Japanese word for winning or something.
Okay.
Like that. But yeah, it is an Israeli company. I think they're like 500, 600 people strong, and half of the team is over here in Tel Aviv, and then the other half is spread globally, like in the US, Europe, and the Asia Pacific. So back then there were 3 people, and they were like the first time I ever invested into a tech company. It was very, very closely related to what I did. So I was like doing web online marketing, and these guys came with a platform to manage search engine marketing across multi-platform. It was Google AdWords, Microsoft Bing back then, and Yahoo, and then I think they had Facebook and Amazon later as well. Same thing with SimilarWeb. I mean, this company, they did web analytics, and that was like very, very closely related to what I did as an online marketer. So I had this kind of advantage. So I was kind of the user of both.
Yeah.
Of these.
You're like, this is really good for myself. I could see how this will be valuable for others.
Exactly. So, I can use this. This is really good. I need this. So probably I'm not the only one. And I can kind of evaluate this because I'm like the perfect user.
What was the size of Kenshu in 2006? What was it like compared to now?
So they just like, they just launched the company. I remember meeting like the 3 founders back at the CEO's living room. And, if I want to like get into a little bit into the numbers.
Yeah, go ahead. I mean, whatever you're allowed to share. Yeah.
I think like with Kenshu was like $1 million pre-money back then. And SimilarWeb was kind of the same. I think it was like 1.2 or 1.5 pre-money. I mean, you don't get this kind of valuation. There's been, there's been like an inflation in early stage, like pre-seed companies. You don't get like below 2.5 or $3 million these days. But back then you can get them at, 1.2 or something like that.
Wow. And so you're kind of through the Kenshu journey, the SimilarWeb journey, and then at what point did you invest in Fiverr?
Okay, Fiverr is much later. So I think it was like back in 2015. That's a couple of years after Down was acquired by Liron Rose. I joined forces with a VC fund, a small fund, like a founders fund by the name of Circa, and we invested into 18 companies. It was a very, very small fund, $12 million in total. And so far, I'm like really proud of what we did. We have 9 exits out of 18 investments, and Fiverr is one of them. This is not an early stage fund. Yeah, I have to say this is like kind of growth stage. So like these are like round Bs. And the criteria was that, these companies have to have a tier 1 VC, so co-investing with tier 1 VC like Sequoia or one of these guys. 9 out of 18, and we've got a couple more that probably are gonna exit. So we're gonna have like a very, very high hit ratio in that fund.
It's really good. Can you say what are you looking at now?
So you asked about 2019.
Yes.
I was thinking that 2019 was kind of a peak year. Valuation were like skyrocketed. Everything was like very expensive. We've seen, we're talking everything. This sounds like an urban legend now. I mean, we're like post COVID-19 now.
I know.
In 2019, like everyone was starting companies here in Tel Aviv. You would see these guys, sitting in a cafe. Everyone is sitting with their laptops in cafes and talking about their next startup. People were raising money on PowerPoints with $3, $4, $5 million pre-money valuations without any traction whatsoever.
You're like, running a company is hard. Come on. You're thinking running a company is hard. Like show me some. You can't just show me a PowerPoint anymore.
Exactly. So without any traction, and I was thinking, like this is like way too easy. Lots of foreign VCs, non-Israeli VCs came into Israel in the last couple of years. Money was was abundant, and like money was chasing deals rather than startups chasing funding. So for me as an angel investor, it was really, really hard to compete with all this like cheap money that came from these investors. And I would say, I don't have to do this. I'm doing my personal capital. I'm investing out of my own balance sheet. I don't have to invest. If I think it's too expensive, then I'd rather wait and do this when things are more quiet. Obviously, I didn't expect COVID-19.
Right.
But these early successes I had with Kenshu and SimilarWeb, like SimilarWeb was 2009. So that's just after the financial crisis. And I was thinking, this guy's like really brave. If he's like starting a company now, when like everyone's like, everyone lost a ton of money in 2008. And this guy's like brave enough to do a startup now. These are the times when like real founders, like entrepreneurs, stick to this, and these guys who are just there for like an opportunistic, because it's like easy, they leave. When like funding gets hard, like now in 2020, like these guys, look back and say, no, this is too hard. We're gonna look for a job.
Yeah. I mean, it's amazing. I mean, not saying you wanted this to happen, but it's almost timed perfectly. You're like 2019's inflated. Who knew it would things would crash with the whole crisis? So what are some of the things you're looking at now? Are there certain companies that you are looking at now, or maybe genres of companies now that you're seeing what's happening?
Right. Yeah. So we're now like COVID-19. This was like totally unexpected, and obviously the valuations are going down now. But surprisingly enough, you can see like there's like this phenomena that the Nasdaq is going up. S&P in the public markets is kind of steady. It recovered most of the drawdown from March, but the Nasdaq, the technology, and specifically the FANGs, that Facebook, Amazon, Apple, Google, they're actually much higher now than what they were in January 1st. So technology, basically what we're seeing here is, technology is like speeding up. We're like kind of covering, I would say like 5 years at least. We're like now at 2025, and the virtual world is kind of expanding and growing on the expense of the brick and mortar world, so to speak. And we're seeing like, retail and tourism and travel like suffering basically, planes are grounded. Like planes are grounded, hotels are not, they're like not you don't get tourists now. Israel basically forces a 14-day quarantine on everyone that comes in. So like these sectors are kind of basically on total hold. But technology and startups, surprisingly enough, some of these companies, like Wix, which is another Israeli company, public Israeli company, and like Fiverr. And now we have this new company, Lemonade, who just went IPO in New York last week, I think. These companies are actually expanding. Oh, another one is Monday. That's another Israeli company, Monday.com. They're not public yet, but they're like, the valuation is now like around $2 billion. So like these companies are actually growing in this time on the expense of brick and mortar. So
because they're all virtual, they're living in the virtual world.
Virtual, they're not, it's not enterprise sales. So they're not like selling, $1 million contracts with large enterprises. They have these users who are paying, $200 per year or, $500, and it's all virtual. And they're able, and advertising, on Google and Facebook is cheaper now because some of these brick and mortar businesses are not advertising because their business is on hold. So So Monday and Wix and these companies are able to get, the customer acquisition cost is going down, and they're able to grow in COVID-19 times. This is like, and the same is kind of true for startups. Startups who are totally virtual, and this could be in telemedicine. It could be in like virtual remote work management. There's certain areas who are actually benefiting from COVID-19, and these are the companies that I'm looking into.
Mm-hmm. Is there a company lately that you could talk about? You don't have to name their name if you don't want to, but and what you just evaluate. I like to hear how you think on, is this a viable investment for you? Like, what are you looking for? What are some red flags? What are something, because you're investing your own money. So it's, you're really probably digging deep into the team and the numbers, but what do you look for? Is there a case in the past, couple months that you could talk about?
Sure. So I'll give you an example from the last couple of days. So here's a company, I will not name names, but here's a company that is kind of looking at human resources, which, in startups, like the highest cost, the highest expense is on salaries, basically. That's like most where of the money, the burn rate, it goes to human capital, to people, or more than into like, rent or equipment. And here's this company that wants to kind of give management an alert, and this is especially more I would say relevant to COVID-19 times, because like of this working from home. So you're running like this company, and you have like 100 people. You're running an R&D department. You have 100 people reporting to you, and all of them are like working from home, and you kind of losing control. And the last thing you want is people, leaving and leaving their job and starting to work for your competitor, right? But they're not coming into the office every day now, and you don't know what's going on. So here's this company who came with a solution to kind of give you like a red flag if something appears that someone is maybe spending less time on Slack, or maybe they're spending less time on Jira or on Monday, which like is there, on company systems, on company cloud-based systems, they detect without like going into privacy issues or kind of
installing a camera in their home office or something.
Without actually spying on their employees, but they're kind of able to detect if something is kind of wrong with any of the employees. Maybe maybe they're not spending the same time on company systems and so forth. And basically what they do is, it's the same with COVID-19. It's either, an employee is green, so he's okay, everything's fine. Could be yellow, maybe, something in his behavior is kind of, system is not sure, or red. So say you have like 100 people, and then you come into the office and it say, look, these 5 people are red, because the system has detected that, they're not behaving the way they usually do. So now you're, and that as their manager, and if an engineer leaves you, that's expensive. I mean, replacing an R&D full stack engineer, that could be, a few $100,000 worth of damage if someone like that leaves. And if you can prevent that, maybe they're having, trouble at home. Maybe like one of their kids is not going to school because of COVID-19. And
someone could be sick. Yeah. Totally.
Maybe someone is sick, maybe they have like, maybe they're, they're not really want to leave, but, we just want to make sure that everything is okay and kind of detect that beforehand, and making sure that, if you can prevent, people from leaving, and you save a ton of money for the company. So I think that's kind of a solution that's kind of COVID-19 positive. I would say this company could succeed.
And then when they share the information, is this typically they already have users of it, or is it just a idea at this point? What phase are they in?
So that's a very good question. So for me to actually consider investing, and when I say I invest my own money, but I usually come as a bigger group of investors. So I'd rather come as a syndicate of investors, investing say like $2 million rather than my own personal check, which is usually $100K. So we'd like to see some traction. So obviously, when this is just an idea and it's just PowerPoint, this is kind of it's obviously the stakes are higher. So you could get in at a much lower valuation. But obviously, the risk is much higher than this team will not accomplish anything, and it will kind of fold before even they sign up their first paying customer. So the kind of my strategy here, or my tactic, I'm exposing this over your podcast, is basically try to have at least two data like touch points with a team. So what I would say, I would say to these guys, look, this is like really interesting. I think this idea is awesome. Why don't we kind of speak in 2 months' time, and keep my email, keep my contact details, and do the same for every other investor you speak to at this stage. And touch base with me in 2 months' time, and then what I will be able to see is kind of the progress that this particular team has accomplished within that time frame. So I've seen them now. I will see them in 2 or 3 months' time, and then they will tell me, look, we were able to secure, for instance, $1 million worth of safe notes from this and these investors. You want to join us now? We've signed up. The MVP is ready, or the alpha or beta is ready now. We already have POCs with like 7 customers, which we didn't have when we spoke to you 3 months ago. And then we'll go, these guys, they kind of deliver. They I've seen them.
They're taking action.
They're taking action, and they're not just talking. And now I've got like 2 bits of information, and I can kind of say, I can kind of extrapolate. Okay, so if they were able to do this in 3 months, what could they do in 3 years, right? So, if the deal makes sense at the second, kind of point of touch, then it's much better than relying on a single data point.
Thanks for sharing that. Yeah, totally. And I could see the huge value of actually that particular company, because you can't just walk around the office and go, Joe looks really down today. You have no idea, but that activity will show you, are they yellow? Do we need to check in with them? What's going on? I can see that being valuable, but I like hearing your thought process. Liron, since we only have about like 6 more minutes, I want to talk about the after download journey a little bit, and amazing growth. And what were some of the highlights of the after download journey, and maybe how did you meet your team to start?
So like the logic behind launching this company, as I said, I was doing like online marketing for these software companies back then, and then Google, who is basically the big gorilla in this business, they have these like content and user policies, which became harder and harder. It was harder and harder to comply with all of their requests. So I was thinking, these software companies are all relying on Google and Microsoft for doing their search engine marketing. How about we come up with this other like ad network, which will have similar quality of traffic, like Google, and we'll do PPC as well. We'll charge our customers pay-per-click because they're already used to do that. And if our quality is as good as Google's, and with us, we don't have to do all these like policies. Our policies could be more relaxed than Google's, and they will come to us. Because we're like, our traffic is converting to customers, to paying customers or downloads, as good as Google's. So that was kind of the logic here. And so I met my co-founder through an introduction. And I think, that was like a very, very good timing to launch that kind of company. I would say that if I was trying to do the same now, 10 years later, probably we wouldn't succeed. But back then was a kind of innovative. And we kind of hit, we kind of identified the needs of our customers, and all of them had problems with those, with these companies like Microsoft and Google. They were like closing their accounts virtually, saying, you guys can't advertise with us because this and this reason. And they had these advertising budgets, and they didn't have where to go. So, and they came to us. Obviously, well, we had to find a way of making this sound easy. But
right.
When we could prove to these guys that do a test campaign with us, $5,000 a month, $10,000, see how it goes. And if it works well, double your budget the next month. It worked well for them, and that's how we grew. It was a bootstrap company, so we didn't have external investors. I think we were like breaking even after 6 months. And yeah, in 3 years, we grew this business from 0 to $30 million worth of revenues in 3 years.
That's amazing. When someone's looking to sell their business or get acquired, what are some of the things you maybe look back on, said, thank God we did this, or what should other people who are selling watch out for?
So two things. I mean, Liron Rose, which was the company that acquired us, and they're like this huge unicorn now. I think the last deal was like kind of 1.5 billion or something. They like, I think we were their first acquisition, and then they went to acquire a few more. And the good thing about it was that kind of we knew them. They were one of our partners. So for a long time, before we actually went through an M&A with them, we kind of worked with them for a year or two. So we kind of knew them, and we kind of knew the DNA of the company. We were used to working with them. And then they made a few offers, and we didn't accept their first offer.
Why not?
They went, why? Let's do this deal. We want to buy you guys. Here's our offer. And we like kind of internally in the board, we discussed, and we were thinking, we can grow our business independently, and we're not like rejecting the idea of getting acquired and by these guys, but this offer is not good enough. We can like grow our business and maybe get a better offer next year. So that's what we did. And I think in year 3, when we kind of approached $25-30 million of revenues, I think they approached us with an offer that we thought was good enough. And it's not that we didn't have like second thoughts. When you sell a company, you never know if, what if we wouldn't sell this company to these guys, and we would have,
what if we go to 100 million? What if we go to a billion? Right?
Yeah, exactly. So yeah, it either goes to 100 million,
right,
and by running this thing yourself, or maybe it doesn't. So you never know. So what we did is we accepted their offer, which was a mix of cash and share stock in Liron Rose itself, and that gave us we got some cash. And then the upside within Liron Rose. If Liron Rose will do well, then basically
You're betting on them.
Yeah, we're betting on them. So I think that went well. The company did really well, and yeah, the rest is history, I guess.
Liron, thank you. First of all, last quick question. We're right at the time. I always ask for a challenge moment, a low moment that you had to push through, and then a proud moment. Because, this journey is rocky, it's messy, it's all over the place, even though it seems like like just skyrocketed. There's, I'm sure, points that are dipping in that 3-year period, even though that's like exponential growth. What's been a challenging time, low moment, and what's been a proud moment for you?
Okay, so I would say, there's when you do these investments. So I mean, some of these deals, succeed and you win, and sometimes you lose. The company goes down, but that's kind of part of doing business, and that's okay. I think if you're asking for about the low point, so I was running like TechStars in Israel for 2 years, and at some point, they made a decision to pull out of Israel. And
really?
Yeah. Then they reversed the decision. Like I think, like a year later, they decided to come back. But when I was running it for 2 years here, and I was thinking, this is like a huge opportunity, and I was trying to convince them, because we were doing this with a corporate partner, and I was thinking, even if the corporate partner doesn't want to continue, doing this, TechStars should, invest their own money and having their own accelerator in Israel. So I was trying to convince management that they should, stay in Israel, even if that means that they have to fund the accelerator from their own balance sheet, rather than having the corporate partner do this. But they went, they didn't want to do that because they was thinking there were too many accelerators in Tel Aviv. So that was kind of a low point, because I was like really happy to do this.
You spent a lot of time. I was reading about it, that you recruited over 100 mentors. Like there was a lot of work that went into that.
Well, that was a lot of work, and I had like 20 companies go through 2 batches of TechStars in Israel. And some of these companies, they're all fintech, so some of them have raised a bunch of money now, and we will see a few good companies coming out of those 2 years. But TechStars decided to pull out, and then a year later, I guess they figured out that it was like the wrong decision to do, and they came back to Israel and relaunched in Israel. But yeah, that was like too late for me. So
yeah, proud moment for you.
So I would say that having started after Download and growing that company into 50 people, and before we actually got acquired, I think we were like really, really proud of the way we ran the company in terms of staff, in terms of employee satisfaction, NPS scores, and so forth. We had a great team. The way we ran the company, I was like really proud to be responsible for like most of these people were like at least anything between 7 or 10 years younger than me. So I was responsible for these guys' income, and they were like really proud to be part of our team. So growing that company into what it was, and having then ironSource bid and offer to acquire us, and they made a few offers, and they knew what they were doing. They're like really buying a great asset. That made me proud. Growing a company from zero to what.
It's amazing.
Now was. Yeah,
it's amazing. Thank you, Liron, for sharing your story. Where should we point people towards to find more, learn more about you online?
Sure. So if people go on Google and type Liron Rose, that's LIRON ROSE, or go lironrose.com, they will find me. They will be able to reach out, get in touch, send me an email. So if anyone wants to learn more about the Israeli ecosystem, what we call the Startup Nation, and get more visibility into that market, they're more than welcome to reach out and talk to me.
Cool. Thank you. Go to lironrose.com, check out more, and thanks. We'll see you on the other side.
Thank you.
What I got, you can't buy. It resides between my eyes. Walked through the fire, came out better on the other side.